Welcome to Commodity Analysis on Tuesday, the 4th of March 2014, and I'm going to use the DAX as an example just to get to grips with very simple concepts. Here is what I call the mother of all forks that you can draw in the DAX, because down here in the bottom left hand corner where the cursor's pointing, this is the inception day of the year of the DAX futures. They started trading, I think, in early 1990 or late 89. I can't remember, but that is the all-time low for the DAX futures. And then we're using two standard Andrews pitchforks. This one here, drawn off that all-time low, the all-time high prior to obviously our recent move. This low here. Then we've also drawn this very sharp fork here. In black, you can see, and lastly, that's also a standard Andrews fork, and lastly, using that all-time low, this first high and most recent low, not the lowest low, but the most recent low, we've drawn an F and L for. F and L stands for first and last. Okay, and you can see some of these are slightly distorted, but we're going to show you how to use and this works on all platforms. This works on eSignal, Telelant, any platform that's got line tools which include a Andrews pitchfork, because I mean, this is MT4, but you really don't want to be measuring like I do and doing detailed studies of various futures contracts. Can take you a long time to draw these lines manually. So you can see here, by the way, just on this black fork, and let's just go in a bit closer. You can see here the effect of this reaction line here. I mean, there's lots of different, you cannot say what the effect's going to be. You can see this one here, there's a gap, and none of these can be moved. These are all to do, if you automatically refresh the chart, back they go. They are not subjective. They are automatically drawn at the distance, as you know. The distance, let's just go out again so you can see the distance from this point, the A, to the midpoint of the BC line, projected forward into the fork. And obviously the reflect the angle that this BC line is at, and what you need to understand is the angle is incredibly important and obviously diminishes the lower the time frame, as we will see when we look at these two, because what we're really looking at here, these two forks, the two most important forks, and the center line, which has just been pierced in the last month on the DAX futures. So let's just go to a normal candle chart. You'll also see I've drawn a tiny little fork in, and that's the number one fork that we're watching at the moment. But more importantly, we're watching behavior around these two these two center lines, the green center line and the black center line, both of which have been seriously touched, pierced. We're going to just go over that and let's just make that not array, and let's make that green. And let's do the same for the black one, because I'm going to show you when we drop down to the daily, this should be black, so we're just going to make that black. Okay, now we're going down to the daily, and we'll scroll forward, and we see these lines have actually changed position. Here's our piercing here of both lines, touches, numerous touches. Here is from reaction fork number 2, which is the black sharp upsloping fork. This is the reaction line. You can see price fell away, pierced, fell away again, all the way down here. And there's a lot more forks in play than just this one. All I think any of these forks represent is just the relationship between three pivots, but all pivots are not born equal, let's put it that way. We're closing the gap, as you can see here. We had a sharp fall away on the Ukrainian-Russian news, although I don't think the fundamentals have, I think they just confuse it. So let's just stick to the technicals here and reaction line analysis. Now I'm going to go down to the 240 minute, and what you can see here, gap around this, and if I'd drawn this, in fact, I want to go back to, I want to take these off, and I want to show you what I'm talking about. Take these two trend lines that we drew when I went up to if you remember the weekly, I drew over them. Let's go down to the daily. There they are. It's two center lines plus our reaction line. Now let's go down to the 240 minute. Scroll forward. Not a line to be seen, only the local fork that you can see there. So what's going on? Well, let's just do this again. This is the black line. Let's do this in the daily. And now let's do this one in the daily as well. The green, we're going over them. Now we're going to go down to the 240 minute. This one is the green one at the slightly less substantial angle. Again, you can see these touches. This is support and resistance. Okay. Now we're going to go down to the hourly. Scroll forward. And what have we got? We've actually got, when I hover my cursor over these lines, we've got the original pitchforks that are now showing up at 9,597, 9,597, around the 9,600 area here. We've now got another reaction line that's from that small fork I showed you about here, pitchfork B, and we've got the two trend lines that I drew manually. And what have we got here? A series of gaps around this center line in this position, an absolute, pretty much definitive area of ultimate resistance. So let's go back to the 240 minute. All we've got showing are these two lines here, the two manual trend lines that we drew over. You can see they end, plus of course this fork here, which we'll come to in a minute. Let's go back to the daily. Let's just tighten that up. We want these to be, and this is, oops, bumps the daisy. That's not very clever. Let's try that again. And this one up like that. And we just scroll back and forward. We can try and get the best. We're going to use these to develop a picture of price. Okay, right, now we're going down to the 240 again. And we should find, there we go. Perfect. The black upsloping center line, the green upsloping center line from the mother of all DAX pitchforks. Now we're going to go back down to the 240 minute. We can see our range established here. It's obvious, and we'll find it. In fact, I have found it. There's another pitchfork, as you can see, and we won't. We'll just put that in black because we don't want to. That's really at the moment remains a multi-pivot line, but I'll show you where it is. In fact, we have to remember price distribution. I think it hangs around here somewhere. In fact, I'm not so sure. We'll come to that in a minute. Let's get rid of that. You can see there's a third. And here we are, touching pitchfork number 1. Should we go to the weekly? Pitchfork number 1, right? Go down to the 240 minute. Whoops. Let's go down to the, sorry, the 60 minute. Here we are. Support and resistance. Here's the upsloping pitchfork reaction line from this fork here, which is, let's do the 240 minute. Here we go. That is the low. You can see, we can see price. Let's just draw these reaction lines in here. Whoops. Change them to red. So it's a reaction line. It's as close to fit as I can get in the 240 minute. Let's go down to the, and you'll see they move, but you can see price distribution. In fact, we need to have a look. Let's go back to the 240 because the way I work, that's what we're looking at. Refresh. See, all of these locations represent this. Refresh. Let's have a look at this centerline touch here. Looks like a touch. You can see. And then the gap up this morning on the opening. Here we go. And now it's below centerline B. Let's just go back. Oops, that's not very clever. Let's try that again, because it should, if you look carefully, you can just see a pin touch. But let's get out of the 30 minute. Same. And now look at the 15. 15. Now I actually want to show you something else here, because I want to go back to the hourly, go back to this pivot, and actually use the lowest low, which is this one here. Now let's go back. And it looks like, let's get rid of that. looks like a non-touch. Let's go down to the 30, looks like a non-touch, and you can see the effect of that reaction line. Let's go down to the 15-minute and you'll see it's an actual touch. So why are these lines moving? Well, if you want more material on that, you see there's a second touch and then the gap up. Where is the reaction line? You see we've got a reaction line here, and now we go into, and you can use all these anomalies, which, as I say, are not just visible in MT4. You can use all of these to help you. First of all, let's use the line location techniques. As you see, the 240 minute, the DAX futures, this is the location in the 240 minutes of these. Let's get rid of that multi-pivot line and keep this as easy as possible. You can see we've hit this, closed the gap. Let's just tidy these up and get them as thin as possible. There we go. Now back down to the 240. There we go. Now we come back to the hourly. You can see the structure. We could see price fall away. And again, test this reaction line here. You can see this is a serious multi-pivot line. This center line acts all the horizontal. Look at that. Beautiful stuff. Beautiful stuff. Look, right the way through using this pivot here. Let's just make sure. And this has got the automatic indicator obviously attached to it. There we go. Now this is a very simple chart. You can see price. Let's go down to the, see, now we're actually going to insert over that. That's green. And we'll do the same for the black. Go down to the 30-minute. Make that green. And we'll make that black. Thicken it up. Okay, so now we've got more structure. Now we're going to go down to the 15. And you can see this is acting, this green line here that shows 30-minute location of our big center line. You can see, look, this is the original showing up here as 1, pitchfork number 1. Look at the behavior. Spike through, support, up, down, retouch. Okay, let's go back. Just have a look right the way through. You need to understand about price distribution. It's the actual body of this candle that's important. If we flick over to, and I often do this, and you can see, again with the reaction line, you can see the actual shadows, the actual wicks of these can often pass through. Anyway, what we're looking for here is a retest lower, a closing of this gap. The only thing that's worrying me, let's go back to the daily, is if we go to a slightly more complicated chart, and this is showing, and again you can, I thicken them up because they are dependent on what time frame they come from. This is, as you can see, again an automatically drawn, you see this one here, refresh and it goes back, there it is travelling, and I've just thickened it up. And again with this one here from pitchfork number 1, refresh and back it goes. You have to start to understand that we are moving within a band of major time frame reaction lines from mega forks, not just that one fork but lots of other relationships that are expressed using the pitchfork that give us the reaction lines. And this looks a bit of a bird's nest. You go down to let's get rid of that. Excuse me, that. You can see the touch on the back of this line here. This is the pitchfork we had on Friday evening. That was the rally we saw. The open, the gap through the lower median line parallel. Bit of a head and shoulders here by the looks of it. Again, support, if you look closely, shoulder, shoulder, inverted head, bosh, reaction line here, and these will all need to be evaluation, you can see here the support this line gives, the resistance it gives when it's on when price is underneath it, and again the support here. And that grey line there is the same as this line here. These more complicated studies will show you, and there's a more complicated study showing you the different, and again all drawn automatically. You all go back. You can see here the reaction lines, different forks. These are the locations of the main. Right there they are again. Let's go down. You can see different locations, different forks. Look at that for a reaction line. Beautiful, beautiful. If you're interested in learning how to use these, you need to contact us and we'll send you some free material. See that reaction line there from fork number F. Again, automatically drawn using the MT4 indicator. That's free to anyone. You can get going with this yourself. Let's just have a look at this study of the DAX. Again, measured high probability trades using, you see, look at this, what's this F1 reaction line? That's an F and L fork, and look at that, beautiful, beautiful. Now we've got a band of two upsloping reaction lines plus this. You know, formations will take on a new dimension. Got a gap here which hasn't been entirely filled, and here's the Euro Stocks. This is the Euro Stocks 50, and again, have a look at price distribution. Forks within forks within forks. Big forks here. If I take it back, you can see there's a big fork, some F and L forks. Here we are. This is our main fork, which is titled Big for you guys, and you can see price close the gap. But here is our, you can just see it here. I'm just going to try and tweak it out because I've gone over it with what looks like a crayon. It's just a thick line. There is the automatically drawn line. Refresh it, pop back. You can just see it peeking out here and peeking out here. And you're seeing price struggle. Price distribution, if we take that up to the daily, again, that's just a small, tiny ingress above that line. Again, here you can see, again, failed. Back it goes. There's a fight going on here. There's a major, major fight going on in all the equity markets. Personally, my inclination is that we have begun a period of sideways movement that will eventually result towards April, early May in a very serious fall. Having said that, the E-mini S&P is a nightmare. It seems to be out on its own. It just doesn't seem to stop. Making new highs, 1869.50 on March as I speak, and you can see again, we go down here, you can see all of these reaction lines are just manually drawn over the automatically drawn trend lines. I mean, if you can't trade that, if you cannot trade some of these support and resistance areas, then you know it's offered up on a plate. Small trades, intraday swing trades in the direction of the trend, and then out at the next resistance level. I'm going to leave you now, and we'll have another free video up in the next 24 hours.